Welcome to Go Dubai, your go-to channel for anything related to Dubai real estate. We'll talk about the part two of the presentation that we started in the last video. The part two is going to talk about what are the frameworks we can look at by making an informed decision, right? So in the current market scenario, when it's uncertain, you got to be very careful. It's not that every investment that you're going to invest will probably give you the same returns, same kind of benefits. So it's important that you assess the investment decision through a proper framework. And today our attempt is to help you with some frameworks, whether you're a new property investor or an existing property investor. Our objective is to help you with some frameworks which will give you a certain guideline to go about your decision making. Right. So before we go into the actual frameworks, let's understand the components of the framework. Right. So there are two fundamental pillars to this framework. Number one being, what are the market fundamentals? Right? What are the property fundamentals? And when you look at fundamentals, four factors go into the property fundamentals. One is the location and the infrastructure associated with the location, developer reputation, the project quality, and the unit layout and specifications. Right? So these four aspects form a very important, I would say, component for you to make your decision. And of course, if all of these things are in place, what is the price you're paying? Right? So what we talk of fair valuation. And when we say fair valuation, usually people only see price per square feet. Of course, that's an important element to look at, price per square feet analysis. But apart from that, we should also see market comparables, we should see rental yield potential, and we should see capital appreciation room that this particular project can have. All of these elements need to be looked at before you make a very informed decision. Now let's start with fundamentals. What do we mean by fundamental? What do we mean by location? When we say location, we are talking about identifying location that already has government infrastructure in place. So this is not a place, so-called place, which will have all the future infrastructure. We are talking about place that either already has the planned infrastructure or it is underway, wherein the contracts have been assigned, wherein development work is already happening, not something just on paper. So we got to be careful in identifying locations like that. There are plenty of them available in the market today. Then the proximity, right? So as an investor, so you may be an end user. Of course, if you're an end user, you would be looking at how well you can reach to different parts of the city. So proximity becomes a very important element. Or even if you're an investor, eventually you're going to either rent or resell your property, which means the people who are going to either buy from you or rent from you will of course look at the proximity as an important element, right? So when you decide about a property, also be very careful about seeing proximity to all the key business hubs, proximity to things like schools, hospitals, shopping areas, so on and so forth. All of these things will matter a lot when you want to monetize your investment, either in form of rent or in form of resale. And last but not the least, supply dynamics. This is something that most people overlook. They go with where the herd is going, right? So okay, everybody is investing in the next area, let me also invest, not fully realizing what could be the supply dynamics in this area. So when we say supply dynamics, looking at the data in terms of how much supply is coming in this particular area. All this information is publicly available. You don't have to worry. In Dubai, in UAE, these information are publicly available. So it's important that as an investor, you understand this element, right? Before buying, if somebody is trying to sell you, ask them how much supply is expected in this area and how is that going to impact my investment. That is surely going to impact your investment, because if there are too many units coming in, of course, there will be a lot of competition and you have to then bring down your price both for rent or for resale. So we are given certain comparison. These are real comparison. These are not hypothetical ones. We've taken two actual areas. So we can discuss, if you want to get more details, you can connect with us and we can discuss in detail, right? Let's say area 1 is an area that has strong government infrastructure. It has prime connectivity and it has limited or controlled supply. Whereas we have one more area which has developing infrastructure. I mean, it is like developing, it's been developing from quite some time, and it has very average connectivity and higher potential supply, right? So a lot of multiple developers in this particular location, multiple projects that are coming up and that will be hitting the market in the next couple of years. It's a no-brainer to see which one is better. Obviously, the area 1 is much more better because it will have high demand, whereas area 2 will have a oversupply risk with no real wow factor also. So this is a very, very important element that every investor, every one of you who's watching this video should be aware of. What are the location fundamentals? And once you're clear with this, comes the developer fundamentals. So of course, Dubai government has put, UAE government has put a lot of stringent conditions for developers. Nobody, without certain backing, nobody without certain strong financial strength cannot enter into this field. And also all the investors' money are secure in terms of money going to escrow account, etc. Having said that, developer fundamentals will matter when you're wanting to resell or rent your apartment, because here in Dubai and UAE, all the properties are maintained by the master developers themselves. So that probably is going to make a biggest impact, because tomorrow when somebody is going to rent the property that you own, or somebody is going to buy of you, they'll see who is the developer, who is going to maintain your property, because they are investing for long term. They are going to live in that place for maybe 5, 10, 15 years. So they will look at all of those things. So that's very important. And not only that, if you're investing in an under construction property, we should look at overall from how long they're there in the market, what is their financial strength, what is the user feedback, what are people talking about this particular developer in the online forums, right? And last but not the least, what is the track record of both quality and timeline, right? All of these things are very, very important. Now, I'm not saying that if you should only invest in top developers. Of course, there are opportunities across the spectrum that we have, but when you're investing, let's say you see on the slide here developer A and developer B, right? There is a distinct difference between the property given by developer A and the developer B. Now, it's not that you should not go with developer B, but if you're going with developer B, be mindful and careful that you're getting a very good price advantage, because developer B obviously has certain shortcomings, but to offset that, if you're able to get a good price advantage with certain comfort and this thing that it will be handed over on time, certain track record. So in other words, if I had to say, it's not that all the 4 parameters on the left side has to be ticked, but even if some of them are ticked, if all of them are ticked, it's much better. If some of them are ticked, you should offset that by getting a good price advantage, right? So somebody is going to advise you on options, you should be asking them, when you're suggesting this developer, what is their track record? How many years they are in the market? How many completed projects they have? What is their financial strength? Have you seen their balance sheet? Have you seen their cash reserves? So on and so forth. And most importantly, what is the user feedback? What are people living there talking about this particular place? That becomes an important element. Once you tick this box, the next one comes the project fundamentals. Across the world, and more so in Dubai these days, the importance of community is increasing. Right? So when you say community, a large combination of houses where people from different walks of life live. It's a big condominium, right? So it's not a standalone building. Earlier, Dubai was known for standalone buildings, but in the last few years, decade or so, there is more importance given to community living, right? So when you're investing, you're better off if you invest in a community, right? So because that's going to have better appeal in the future. People who are going to rent or buy from you will be more comfortable, particularly the families will be more comfortable to buy those kind of units. Now, of course, again, does that mean that you should not invest in standalone projects at all? No, that's not the point here. If you invest in a standalone project, then you should look at some of the other elements. So, for example, a lot of standalone projects also are branded apartments. Now, branded apartments have a very different appeal in Dubai here and overall in the UAE. Usually, branded apartments get about 20% higher rental compared to normal apartments, right? So, if you're going for a standalone building and if it is a branded one and a particularly hospitality brand apartment, then yes, maybe it can get you better returns in the future. Let's say if that is not there, does it have any other wow factor? Maybe some water views, maybe a golf course, maybe proximity that no other location or no other project can beat, something. The project should have some X factor. That's when it will give you edge over other investors who are also in the market trying to rent or sell their unit. That's a very important factor to consider. And last but not the least, once you ticked all these 3 boxes, what is the unit you're getting into, right? So now let me show you a few examples here. Now you see a 4-bedroom townhouse. Now, how different can 4-bedroom townhouse be between one and the other? And you will see it here. There is a world of difference, right? On the left side, you see that is also a 4-bed townhouse, and what you see on the right is also a 4-bed townhouse. Now, you see the efficiency, you see how usable spaces are there in the right side one versus the left side one. So somebody may market saying that 4-bed townhouse at X price, and a lot of times you get call, hey, there is a 4-bed house at that price, you are giving me some option which is much higher, right? So just because it is a 4-bed does not mean it is an apple to apple comparison, right? We got to see the floor plan, we got to see the livable spaces, we got to see how the house is made itself. That can make a big difference for you to live in yourself, or tomorrow you want to rent it or resale, right? And when it come to apartment, things like floor level premium, right? How much premium? What is the optimum premium to pay? So I'm not saying you should go always to the topmost floor, right? Or you should never buy the bottom floor. But how much premium are you paying for what floor, what view matters a lot, right? If you pay too much, then it will be difficult for you to monetize that. Or if you get into undesirable unit, it will be difficult to liquidate. So you need to get that right balance between these, right? Getting a desirable unit and paying the right amount of price for that. And layout and floor plan, right? Are you buying a floor plan? Are you buying a layout that is going to be functional and usable? Or is it going to be a kitchen that is called as kitchen, but it's just cabinets hung on the wall in the living room? So what are you buying into? That's very important. And the efficiency of layout is important. What do we mean by efficiency? You will see that in the coming slide, right? So these are again real live examples we've taken from the property listings, right? So there is property A, which is marketed at 1.9 million. Price per square feet is 1,872 for a 1,000 square feet apartment. Now you would wonder, and it's same area, both of them are exactly same location, right? You would wonder that when 1.9 million is available, why would I pay 2.15 million for a similar square feet, right? You can see on the right side, it is in fact just 6 square feet more than the left side one. Whereas the per square feet, rate per square feet is going up to almost 2106. Why should I go for this? You should go for this because the property B is much more efficient, because the ratio between the internal and external area is much better in property B compared to property A. Because property C, if you see, is 70% internal, 30% external, which is balcony area, which beyond a point is not usable, right? You may have a sparingly used feature for balcony, but otherwise balconies do not beyond a point contribute to significant interest from renters or buyers, from end users for that matter. Whereas property B has got an optimal ratio of 85 and 15. And that is why similar property, though you paid more for property B, your returns will be also much higher. Because of the property layout being more efficient, you will get much better rentals than property A. And these are actual numbers that we have taken, right? We can share the details if you wanted. You can comment on the video below and we'll share the details with you. Whereas property A is giving 5.8% rental yield, property B is giving 7.1% property yield. Now that alone is contributing to 7% difference. And then of course, when you want to resell it, it's anybody's guess which property will be more desirable. Is it property A or property B? So these are very, very important factors to consider before actually investing, right? Not just some marketed project, something that it will sell off today and all that. You got to look into all these details before making your decision. And now coming to the framework itself. So now, these are all different components of framework that we discussed. And once you understand this, then we'll put this into a 2x2 matrix, right? Now this 2x2 matrix has fundamentals on one side and it has entry point on the other side. So now that we understand all these fundamentals, let's try to put all this together in a 2x2 matrix, right? So let's see how all these things come together in a framework, right? So we have this 2x2 framework in front of us now, which talks about fundamentals on one side and entry price on the other side. In one corner, we have properties that fall under avoid segment, right? These are properties that have weak fundamentals, which means either location, project, developer, unit are bad, and it also has high entry prices. You would be wondering, are there really projects like that? Trust me, there are. And trust me, there are investors who are also investing into those projects. So you got to be careful of that, right? You got to completely avoid those units. So that is an avoid segment. Then we also have certain properties which has good fundamentals, which means location, project, developer, unit are good, but it comes at a higher entry prices. Particularly when you talk about from top tier developers who tend to charge a certain amount of premium for the brand value they command, so on and so forth. Now, it's not necessarily a bad buy, we feel it's a safe buy. Why is it a safe buy? Because though you're paying slightly higher entry price, you're very sure that whenever you want to sell it, you can get out of it because the fundamentals are very strong, right? So you may earn slightly lesser when you sell it, but you're very sure that whenever you want to do it, you can get out of the investment very easily. So it will be very liquid asset as such. There could also be certain projects which are weak on fundamentals but extremely good entry price. Now this is where you need to strategically look at, right? You need to carefully look at. Now, is this providing some short-term opportunity for me to sort of exchange hands, or is this something that the fundamentals may not be that lucrative, but maybe I'm using it for my self-use? I'm okay to stay in a XYZ place. I'm okay to stay in a XYZ community, which on paper may not be very strong, but it's giving me an extremely good entry point. It's giving me an extremely good entry price. So you may want to then consider it very carefully, strategically, whether you want to lock into that. The best buy obviously is the last quadrant on the bottom, which is properties that have very strong fundamentals and have low entry prices. Now, of course, these are very hard to find, and that's why you will see sometimes agents saying, you will hear in the market that sold out in day one, because these are projects that will have extremely good fundamentals, good project from a good developer in a good location with a good unit and very good entry price, and that's why they just fly off the shelf very fast, right? So you got to be very vigilant and careful if you want to lock into such investment opportunities. So this framework presents a very good pragmatic, logical, data driven framework for new investors to look at your investment decision. And as I said earlier also, we are living in a uncertain time, so hence making sure that your decision passes through these filters is extremely important, right? So now let's look at what happens to somebody who's already holding a property, right? Sometimes lot of queries we get from existing property investors. Should I sell my property? Should I get out of the current, should I get out of my investment in the current scenario? And even for that, we have a simple framework, a 2x2 framework, again basis the fundamentals. But here on the other axis, instead of entry price, we have cash flow as the parameter. So if your property has weak fundamentals and positive cash flow, evaluate exit. But in the current market scenario, you may not get the exit, so just sit tight, it's okay, because you're at least having positive cash flow. Fundamentals may not be very strong. Wait for the right opportunities, and at that time you can exit. If you have a property that has weak fundamentals and you're generating negative cash flow, which means you're actually funding from your pocket, maybe there is a mortgage and your rent is not even covering the mortgage, which means you're funding from your pocket and the fundamentals are weak, there is no possibility for this property to really go on a very good bull run in the coming future, then I would say cut the losses and exit, right? So there is always a saying that says don't put good money behind bad money, right? So maybe yes, you made a decision with a certain thought process, it did not work, take it in your stride, cut the losses and exit. Now there could also be certain investments which are strong fundamentals but currently generating negative cash flow, right? It could be because of a short-term reason, it could be because of the current market scenarios. Now this is where you need to optimize and hold. When we say optimize, what are the ways to optimize? You can either restructure it, you can either repurpose that house, like you can either move from either long-term to short-term, short-term to long-term, depending on the current scenario, or you can do some modifications, you can do some upgrades so that you can have better cash flow from it. A lot of owners we see, they just do some upgrades and suddenly the unit becomes more appealing to either tenants or new buyers, right? So you could do that, or if none of these things are possible, go for refinancing, right? So you can actually go for a equity release from this unit, so that you can use the money that you get from the equity release to get another asset that will generate a positive return. So overall your portfolio is giving net positive returns. And of course, if you are sitting on a property that has strong fundamentals and positive cash flow, you should sit tight on it. Hold confidently, nothing to worry. Don't worry about the current market scenario. It's very, very temporary phenomena that we are seeing. Things will come back to earlier levels very, very soon, so you don't have to worry. So this is a framework if you own a property, and if you want to have a very detailed discussion with specifically your property as an example, feel free to comment or reach out to us. We'll be happy to get on a call with you and take your property through this framework so that you understand where your property stands in this quadrant. The last slide that I have before I wind up is why buy now. I mean, this is one of the very important data. I was just going through some report the other day and got this data. The construction cost. So if we see here the cost that was there before to the current price already, I'm not talking about estimated price. Already the construction prices have raised from, have increased anywhere between 20 to 100%. Now look at it. This will obviously impact whether today or tomorrow it will have an impact on property prices. Now, whether developers like it or not, of course, developers are in a very tough situation now. On one hand, they want to generate demand by giving more discounts. On the other hand, their construction costs are going up, on a day-to-day basis. So, for which they need to also manage it. So, I get these queries from people saying that will the market come down in the next 6 months to 1 year? Is that the right time to invest? I say, I see that as a very, very unlikely situation, because what we are seeing now, the supply chain disruptions, logistic disruption is real, right? This is not speculation, this is real. Things are not coming on time. Things are taking much longer. Things are, it's taking much more cost to get a goods to your place. So all these things are going to have an impact on property prices, and this will have a direct impact on your purchasing power as well. So if you are someone who was considering investing and taken a pause because of the current scenario, very understandable. However, it's our genuine advice to evaluate your current options through the frameworks we are given. And if your property is fitting into a framework, and if your property is sitting in a positive quadrant, you can go ahead, because prices are only going to go up from here, not come down. That's our take. That's our take on the current scenario. So this completes our part 2 of this series of the current market scenario of how is Dubai in a shifting world. So as always, we are very happy to sit with our investors and do a very data-driven analysis to whether you want to buy a new property or you want to evaluate a existing property. So happy to get on a conversation. Until then, have a wonderful day and a week and a month. Look forward to seeing all of you in the next video.